Welcome in. I am the Crypto Bull God, and this is all in the charts. If you appreciate the content, make sure to hit the thumbs up button, drop me a comment, and click the bell icon for all notifications to know when I go live selectively on weekdays. So if you guys are following me on X Twitter, you know yesterday I said I was taking the opportunity to do something a little bit different on a Monday. Fast flash from the past from a week ago at the beach. So it was a nice kind of start to the week for me. And I did indicate that once I came back today, I would have quite a bit of information to share with you, which I do. So I hope everyone is having a good start to the week. We'll be live streaming today. We'll be live streaming tomorrow and Thursday. And most likely not on Friday, but I will be here for the rest of the normal days. Now, today will not be a TA Q&A because we have a lot of charts to get through. I actually have notes written out for myself here. Didn't really do a lot of prep beyond the notes, didn't get the charts prepared, so we'll be building some of them and looking at them for the first time together. But with that being said, guys, I hope everyone here had a good weekend. Good to see some Caspa fellow Caspians in the live stream. Juan, it's always nice to see you. All right, so a couple things I want to get into. We're going to kind of start off with what we typically do on this live stream. We're going to take a look at the 12-hour chart because we know if we've been subscribed. I'm speaking in third person, or speaking in we. Anyone subscribed to the channel knows the historical significance on the 12-hour chart. Now, what I roughly had depicted here, these rectangles from the prior live stream that I did on Thursday, this is the general higher high and higher low price action I want to get in. Breaking 61.8 is going to be monumental. Now, the reason I have this up at 63.8 that I want to consolidate in this area at 63.8 is an area of price confluence right in line with the 50 and 200 simple moving average. So what that's implying is I want to start to see these candlesticks start to close over 63.8, right? So right in between 63.8 and 68. So right now we're doing exactly what I wanted to see, okay? We just have to wait for our next leg up, whenever that is, and then eventually getting up here, which I don't think will happen until later in September, maybe not until October. So yeah, prices just consolidating right now. But what I want to do is I want to take a look at the 2-week chart. We knew we had a 2-week candle body close. I was talking about the significance of the candle body close for the 2-week. We didn't want to see a bearish engulfing candle. Where the body of the red eclipsed the prior green body of the candle. We got that. Now, what does this actually mean for me? I was trying to think about how I wanted to best articulate my current sentiment on the market. So my current sentiment on the market is I am super bullish high time frame. Okay, nothing has changed there. Again, blow off top. More and more I study and learn, the more and more the business liquidity cycle makes sense. And so I don't, with that in mind, I don't know if it's going to be the second or third quarter next year. Who knows, maybe the first quarter, but we're not going to have a blow off top until next year. Nothing about that has changed. I feel very good that all this has been consolidation. Now, but what does this 2-week candlestick say to me though? Because it came in bearish like this, what this tells me is that there is at least a fair amount, choose my words carefully. I believe there is a very reasonable, solid amount of likelihood that what we could see over the next course of 4 to 6 weeks is just fucking chipping and chopping volatility. This, to me, well, I ultimately don't think this is spelling doom for us and we're going to be going significantly lower. I think the bottom is most likely in. What this could signal to us, though, over the course of the next week or two, you could see some volatility, maybe some sharp volatility come down to these levels. Again, I don't like the fact that this 2-week candlestick has closed out the way it has. We want to see a close. I mean, really what you'd like to ideally see, and this opened, okay. So ideally what you'd like to see is you'd like to see not by this Sunday, but by the following Sunday, really for prices to push up right up here towards 68. Okay, that's what you want to see. The more important, even though this 2-week candlestick wasn't as bullish as it could have otherwise been, what we're really waiting for, and this is something I've been hammering home on now for several live streams, we're waiting for the month of August to close out. Once that month of August closes out, it's going to tell us a lot because of the prior candlestick that closed for July, but also because we're getting a 2-month close. And we've spent quite a bit of time talking about that. So we'll have to see how the month of August closes out. But we really, ideally what you'd like to see, getting back down to a more granular level here, in my assessment of the charts right now, and actually, let me pull up, and I still didn't want to get off the 2-week, and I got to get to the weekly as well, because the weekly actually looks great as far as how we closed out. Here we go. Yeah, so for the month of August, if I could pick one level, I probably already communicated what that level was, to be honest with you, but yeah, we definitely want to close above this level here, around 61,000. But I thought there was another price level that I gave you guys. But regardless, for the month of August, what would be very bullish is if we could close somewhere right in between this area here. So if we can get up to this $63,800 to $68,000 level, I think that sets us up pretty for September. Now, something we are going to take a look at. We're going to take a look at on today's live stream. I don't want to jump ahead. What we can do within the markets is we can study some seasonality patterns that exist. And we're going to get into that, like I said, in a little bit here. But typically, September likes to either come in as a negative month or sort of like a doji month, where maybe there's some downside and upside, but it's fairly neutral. What we're really waiting for, in my opinion, is for the start of that fourth quarter. I think momentum is really going to begin to pick up in the fourth quarter. I think October could be that month where you see Bitcoin at the $85,000 to $92,000 range. Now, I want to get back to the 2-week chart because what we haven't assessed, and if you've been paying attention to the things I've been sharing with you, you know that one of the items we wanted to look for was this stochastic RSI getting above 20. Because keep in mind, the stochastic RSI, which is our indication for trend momentum, okay, we need this confirmation to flash bullish. And the way that it flashes bullish is what we get above our 20 trigger line. That 20 trigger line is this dotted line right here. So you can see how far removed from it we are. If you look sort of in the mid upper left-hand corner of your screen, you will see it says stochastic RSI 10.77, 9.41. So we want that blue value to get all the way up to 20, and eventually for that orange to cross above 20 as well. So still some work to do. The thing is, if we have a bullish close to this 2-week candlestick, and this has routinely happened, we're not going to do a history lesson here, but routinely, especially when you couple it with a high macro time frame bullish thesis, it wouldn't surprise me, also based on history, if we end up getting a close this in the next 2 weeks all the way up here at 68. It wouldn't surprise me one bit, having been here for as long as I have. So, but we'll have to see. Remain patient. Now, if we go to the weekly, this was great. Again, it's less important to understand the names of candlesticks. It's more important to tell you what the candlestick, what is the story behind the candlestick? Is it bullish? Is it bearish? What does it say? This is a really bullish candlestick, and what it tells me is, just look at the price wick. We had seller exhaustion. We came all the way down here to 49,000, and we ended up closing above where we opened the week at all the way up here towards 59,000. So very, very bullish candlestick on the weekly. We're sticking above the 50 and 200 simple moving average. We're below the 20. Let's take a look at our price indicators. So MACD hasn't turned around yet. It's trying to. You can see that if we have a positive week coming this week, the way that the histogram looks for the MACD is it's you see how the MACD actually does a good job of depicting the chip and chop that's been going on. Look at these histograms going back and forth in terms of volume and also degree of downside with the color of the histogram. So the MACD is trying to find its bearings. If August kind of sets up the way I'm anticipating it to set up, you're going to see a lot of these. We're going to be looking at these in a few weeks, and you're going to see that MACD begin to level up and look for maybe a zigzag potential cross in September, but an ultimate cross up probably in October. Relative strength index, again, remember, keep in mind, we had looked at this. I believe the level was 54, and for whatever reason, I lost the chart where I had this drawn out. But on the weekly, typically, once you break 70, not only is that where you experience the highest amount of growth within Bitcoin price appreciation, but also, once you've broken that 70 level, what you don't want to see on the RSI is breaking below 54, right? And when that has happened in the past, we took the look at it a couple weeks ago. When it has happened in the past, it has resulted in a significant downside. So right now, in assessing this weekly chart, keep in mind some of the things that we do on price charts, we can also do on price indicator charts. So just like on a price chart, we might draw descending resistance. We can do the same thing on a relative strength index. So there, in generalities, you can see there's descending resistance on the RSI. And what that's telling us is there's not a whole lot of strength behind what's going on. I mean, ultimately what you want to see on the RSI to get bullish, it's the same thing you'd want to see on price action. You'd want to break descending resistance, fire above the 70 trigger line, and continue increasing here. You also want to take this high out here. This is something else that I think we should pay attention to. Whenever we do start to push above the relative strength index reading of 70, we're going to want to take out this past higher high. This high came in at 88, which you don't want to see form on this chart, and what would be sort of a giveaway that we would need to be careful is if we began to experience negative divergences on the weekly RSI here. So if we started to break above 70 and then we started topping in this area around, say, 83, that would be a warning shot. We'd have to watch out for that. Now, if we go to the stochastic RSI, you can see here, thank you for everyone new tuning in. Make sure you hit that thumbs up button. Helps me out as a content creator. Now, for the stochastic RSI, you can see, as we were speaking, you can see the commentary in relation to speaking to the 2-week chart. We're waiting for that positive confirmation up cross. We got it here. Okay, we got it back in July, but now we've since curled back down, which isn't the end of the world here. We just want this faster moving blue line here to begin to cross above 20, and the way that we're going to accomplish that is having a solid week this week. So let's see how the week closes out. But the weekly and 2-week, they're trying to find their bearings, right? They're trying to find their bearings. Before I get into the rest of the content here, I want to see who I have in the live stream. James, good to see you in. Ricky, what's up, my friend? Good morning, Jep Rocks. Again, guys, I can tell based on who's viewing and who's liked what. Please, for the love of God, just hit the thumbs up button. It's how I'm rated, all right? If you want me to get a good report card, that's what I need right now. Okay, what else? Something else that I did want to talk about here. Again, I came very prepared today. I have notes. Of course, I have not gone around YouTube to see if this has gotten any attention. I'm sure there's some clickbait fear porn out there. I have no doubts. This is a daily chart. A death cross, which you never want to see, is when the 50 simple moving average crosses below the 200. A couple things to keep in mind with these death crosses. First off, they're lagging indicators. So the fact that you're having a death cross occurring, sometimes what ends up being the case is that the downward momentum that led into the moving average, the faster period moving average, the 50, sometimes the current downward price reaction resulting in the 50 crossing below the 200, it's already reached its end point, okay? And now, and quite oftentimes, if we go back, which we're not going to, but if we go back in history, you'll see sometimes when you get these little death crosses here, price has already started to exhibit weakness and is trying to find its bearings and is going to continue pushing up. The thing we want to watch for on this chart is how quickly can we get back above 62,000. The degree to which we can begin to get above 62,000, what it will avoid is this. This is the one thing we don't want to see. I don't anticipate this, but this is what you wouldn't want to see. You wouldn't want to see, now that we have a death cross, you see how the 200 pink moving average is still slanted up? This isn't a true monumentally earth-shattering death cross, okay? As compared to, if the 200 here, you see the 200? If it began to flatten and then curl down. Now we have a serious situation because you got the 200 simple moving average curling down. If that's the case, there's no way the 50 crossed back above the 200. If it did, it was extremely temporary. And now it's slanting down even more extreme. It's a faster period moving average. So this would be the scenario we would want to avoid. I don't anticipate it. There's a probability for everything, so we can't completely rule it out. It's not what I'm expecting. But in generalities, this is what you don't want to see. Just like when you experience a golden cross, not to be confused with a golden shower, just checking to make sure everyone's awake. Golden cross. There are many things I've done in my life. Thankfully, I can say that's something I've never participated in. Let's get back to the charts. The golden cross is when the 200 and 50 simple moving average are both moving up, and you get the 50 crossing back above the 200, okay? What people sometimes often confuse there is when you're getting a golden cross, but the 200 is coming down like this and the 50 is crossing up. That's not a true golden cross, okay? What's up, Neffy? Good to see you. So, anywho, I wouldn't really get too alarmed by this. Again, just try to take a step back and ask yourself kind of intuitively just be logical about the chart. What does price action need to do so that this view resolves itself, okay? All price needs to do is gravitate around this general area here and then eventually begin to push up, right? So nothing overly concerning. There was a 3-day view that I did want to take a look at with you guys. I don't know what show that's from. I forget. Appreciate everyone new tuning in who can't take 2 seconds to hit the thumbs up button. Just wanted to say thank you. I really appreciate the support on the channel. I'm glad I come out here every day and provide free knowledge, and I don't get the respect. Where the hell is the respect? If you respected me, you would hit the thumbs up button. So by the mere fact that you're not hitting the thumbs up button, it means that you have no respect for me. I really don't know how to take that. Yeah, so the one thing I did want to take a look at on this chart, there's at least one person who felt some compassion there. Thank you to that one person. So the thing I did want to point out on this chart, we're just going to focus on one moving average. Now, this is the 3-day chart. And the one moving average I do want you to keep an eye on here is the 50 simple moving average, which is the purple line. You can see ever since we broke it right here, we tried to get above it and we couldn't, and we've rolled over. In the past, now here's an exception, right? But again, based on our limited data that we do have here, you can see when we crossed down here in 2021, Yes, we did move higher up in price, but ultimately this was part of a corrective wave structure. So this was sort of a forewarning of what was to come back in 2021. You can see here back in 2019 when we got the 50 simple moving average breached by a candle body close. That's the way we breach it. Yes, we temporarily got up here, but we had that beer virus. And then this is when a young CBG joined the market before he was even CBG. When I joined crypto, my grassroots Bitcoin. When I joined the crypto Twitterverse, I was not CBG. If you know my original name on Twitter, X, I applaud you. It was definitely not CBG, but keep that to yourself. Now, this is 2018. You can see when we got a close below the 50, not good. 2016, 17, we wrote it, right? So it's at least, it's not a guarantee, but it's at least something that has my eye, right? Because what I can't do, here's the thing, guys. What I can't do is put rose-colored glasses on. Yes. Macro, I feel incredibly bullish and extremely optimistic. And while certain not about anything, this market will rip the shirt right off your back. I've been humbled by this market. I feel very confident in my view for next year. Some of these charts, they're at least indicating that you can't just have the rose-colored glasses on. Even if you have that high time frame macro view going into 25, you also always have to consider alternative scenarios. But the main thing that I'm thinking of is between now and then, there's a lot of volatility that can take place. Do I think that the bottom is in at 49,000? Yes, I do think it's in. Could there be a wick? Again, keep in mind what we talked about on this 2-week chart with the body engulfing the green here. Could there be some volatility this week or next week? Could Bitcoin, let me give you a hypothetical. I don't say this and knock on wood so it doesn't happen. Say by Thursday, Bitcoin is all the way down here at 44. There's no reason we could be at 44 on Thursday and all the way back up here at $60,000 by Friday. This is cryptocurrency. This is an extremely volatile market, okay? This degree of volatility is completely possible. What I am open to the idea of is a sharp amount of volatility, some sort of a capitulation wick that wasn't accomplished here. I think this was our capitulation wick, but I'm open to a wick. What I'm not open to, again, possibility, but I'm not open to it because I don't feel that it's very likely, is that we're going to get some sort of significant down price action down to these levels and close down here and then stay down here. I don't see that in the charts. I don't see that at all. Could I see some sharp volatility this week or next week? Absolutely. So again, that's one of the things that these charts are at least, keeping me honest on and trying to look at things as holistically as possible to really try to formulate what an honest view of the market is. And my honest view of the market, very simplistically stated, is high time frame macro bullish going into next year. How we get there from here to there could be a decent amount of chop, volatility, and it's certainly not going to be up only. We just got to remain patient here. Look how long this consolidation has been going on. I mean, look at this thing. This, in many charts, this would not be an extremely long period of time, but in the Bitcoin world, it is an extremely long period of time. Okay. Yeah, so that is one view that I wanted to share with you guys. Let me see what else I got here. So I want to have an important conversation with you that I think everyone, and again, for everyone new tuning in, thank you so much, and sorry I missed yesterday. If you follow me on crypto Twitter, you know that I was enjoying the day yesterday and just trying to enjoy life a little bit. But what I had indicated was that, hold on one second. There we go. what I had indicated was that we would most likely go over the roughly 30-minute allotment for today's live stream because I did have a decent amount of ground to cover today. So let me pull this up. I want to have a conversation about seasonality, what it is, how to properly interpret it. Because, sometimes what happens is, there's a lot of other good content creators out there. I'm not saying otherwise. I've always said that. Good content creators, educators in the space. That's what I consider myself. I am not an influencer. I don't like the word. But sometimes people who speak to data without even realizing it don't speak to it in the proper context. Or at least they don't put it in the right context so that people really understand sort of how to interpret it. Sorry, my phone's not on silent. I mean, usually I'm not that popular. I'm going to be honest with you. I really don't get that many phone calls. Nobody loves me. Feel sorry for me, all right? This is the moment where you feel sorry for me. Send me some nice comments, all right? Send me some nice comments in the chat there. CBG, we love you. I'm not needy, please. I'm not needy. Okay, let's get back to the charts here. So let's get into these returns. Nobody's biting on that, huh? All right. So how could I properly share with you what seasonality is? Well, it doesn't really matter what you look at. Evan does love me. Thank you, Juan. I know Evan loves me, and I love Evan too. Seasonality can show up in so many different things in life, okay? So many different financial industries. So I will give you an example. It's the first thing I think of. As you may or may not know, I am a life insurance actuary. So within life insurance, I've done a lot of pricing work, okay? And pricing work involves ensuring that your products are appropriately priced for the risk profile demographic that you're selling to. And in order to accomplish setting those rate levels correct, it involves monitoring your claims experience. And when monitoring claims experience, this is probably even a better example, the reserving actuaries who have to hold money aside today to pay out future claims, they have to set those reserving levels right based on future projections. And the way that they sometimes modify their reserving factors is to account for seasonal fluctuations. What could be seasonal fluctuations within life insurance? Well, you tend to get a lot more flu-related deaths and deaths in general in the winter months. People have exacerbated health conditions with pneumonia and all sorts of things. So January, there tends to be a pickup in January and February. Okay, now one of the other dynamics you see is during the summer months there are fewer term life claims, but there can be higher amounts of what are called accidental death and dismemberment claims. So accidental death claims would be like car accidents. People travel a lot during the summer, so that's why sometimes you see an uptick in the incidence rates for accidental death and dismemberment claims. Well, when we're talking about financial investments, we can do a very similar form of analysis, and we can come up with different reasons why. But typically, when we look at September, we can see it typically is a red month, right? We have the average down here. This is really helpful. The average and the median, so 4.8%, 5.6%. So right around 5% decline during the month of October. You can see the huge uptick in October with an average return of 23%, okay? And then so on and so forth for November and December. So what could be going on in September to drive some of that? Well, I fall into this boat. I filed a tax extension. So my taxes are not, I am not liable. I am not responsible. Well, I am responsible, but I'm not required to pay any monies owed to the IRS until October, whatever, of this year for the preceding tax year, right? And because I filed that tax extension, what could end up happening on my tax return is I owe money, right? So that might result in me needing to, and again, this is hypothetical. This doesn't actually apply to me, but giving the example, I would have to sell some of my investments to account for that additional tax that I owe to the IRS, right? So some of the selling that's being driven in September is to account for that. Interestingly enough, when we go into the fourth quarter, and this is why I'm so bullish in the fourth quarter, not to mention the fact that if you had to think about a similar point in time that we're at, you could compare right now to entering the fourth quarter of this year will be very similar, in my opinion, of entering somewhere around the fourth quarter of 2020. Very similar to maybe entering the summer of 2017, right around that time frame. So, assessing the data here, what we can do is we can just come up with sort of an expectation of what we could anticipate for September. Right now you can see we're red for the month of August, okay? So let's just look at September by itself, because September will be, I believe, a very important month. Again, I think it's going to come in as a doji month. But you can see based on past data, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 years, okay? And it looks like 3 of those 11, 8 out of 11, okay? 8 divided by 11. There is just accounting for the month of September, there is a 73% likelihood that September will be a red month. Now, the other thing we can do, we can have a little bit of fun here, we can look at the prior month, and determine based on that month's performance how September performs. So in this case, when we have red months, it looks like most of the time we get a red month again. When we get a green month, most of the times we get a red month again. Wow, it's funny how that worked out. So September, what I would say about what we can deduce about September are 2 things. One, we can deduce that there's a low probability that it's going to be a positive month. And the second thing that we can conclude is that even though it's going to be a down month, you'll remember right before my surgery last year, before I went out, I put together a video, Sinister September, had a video out there, and I cautioned everyone, because this will happen. We'll see how this month closes, but I just want to caution everyone. You will get people that'll sort of feed into your emotions and have clickbait out there about September being some terrible month. Things are going to be dumping. I would never financial advice. I would strongly recommend that you do not feed into that, okay? September could very well likely just be some sort of a sharp to moderate, non-eventful doji candlestick month. Now, if you remember September of 2023 last year, it was an extremely uneventful month. It was the worst month to go out on before my surgery. It was so uneventful. So just what I would stay focused on is how does August close? And then anticipating for September, it's going to kind of be a month. October, November, and December are where things really begin to pick up. Now, interestingly enough, if you compare it to the time periods, well, it's kind of hard actually, because I feel like I think you can compare the fourth quarter of this year to roughly, like I said, the fourth quarter of 2020, in which case we had an extremely bullish 3 months. But then for 2016 and 17, I don't think it's right to some degree it is right to compare it to a seasonality wise in the same 3 months, but I think we'd be more in line with the summer of 17. So that's kind of a tough one. But anyway, here you can also see we have some quarterly returns here. And again, you can see this fourth quarter historically, no matter what year you're talking about, it has been historically a monumental quarter, guys. Here's something else I should say about 2016-20, and we don't have 12 here. What is the other thing that is historical about it being 2024, 2020, and 2016? They are election cycles, okay? And typically, if you think about this for a moment, and this is where we can take something more logical and fundamental in nature and apply it to the charts, because all that human psychology is baked into the charts. What happens in an election year? Well, the person who is the current president of the United States, he or she and their administration does not want to see a tanking stock market going into the elections, right? They need to proclaim. It's amazing how many things take place in politics that are just so disingenuous. It's so much gaslighting. I'm so sick of that term, but so much gaslighting. Anyway, every politician, whether you're on the right or left, it doesn't matter. They will want to take claim for having a strong economy going into the election. And even though we could have a debate that, the economy and the stock market are two different things and there's a clear divergence between the two, still they equate them together. So the point of what I'm saying is it's highly unlikely in the fourth quarter of this year you're going to see a tanking stock market. I've been saying this forever. You're going to see a very strong stock market going into 2025. And quite frankly, in my opinion, it doesn't matter who gets elected in 2025. That's not going to play a role in how the market turns out. It doesn't matter if Trump gets elected or Harris gets elected. Whatever's going to play out in the charts is going to play out in the charts. Okay, so let's just not make any mistake about that. I think the thing you and I need to be more concerned about in terms of who gets elected to office is what that general regime looks like in terms of enforcement and laws moving forward. But it's not going to impact anything that the charts are telling us right now. The president it doesn't make a hell of beans difference. I could have that conversation till I'm blue in the head with my father. He just would, yeah. And many people they don't see it that way. But yeah, so this is shaping up to be an extremely positive fourth quarter, and then you can see once we get into the first quarter, it looks like much of the same. So again, hang in there tight. Again, with some of this downside volatility that I thought was less likely when we came down to this 49 area, I was trying to encourage everyone, coach everyone up a little bit that, hey, even though you got some level of volatility that you didn't kind of view as your primary outlook on what was going to happen in the shorter to midterm, did anything structurally change within the charts that you are looking at as being very bullish? Did anything structurally change? No, it didn't. Remember, Peter Schiff was taking victory laps the night that price was plunging. One of the things I said on that Spaces is we have an entire week. A lot can happen within an entire week, right? And look what happened. I mean, this was the weekly price action. I mean, we opened the week at 58,143. We had a low of 49,200. Peter Schiff is taking victory laps when Bitcoin was down at 52,000. We recovered and closed the week out higher than where we opened at nearly $59,000. So just remain patient, guys. And this is, no matter how many times, when you live stream nearly every single day, sometimes you get lost in all the things that you have or haven't shared. And one of the things that I've kind of reiterated, over time, and it's one of those things that doesn't register until it actually happens. People think in this market that they have the utmost confidence that they can sell the bottom and buy the bottom and sell the top. Okay, I'm having a Biden moment there. Buy the bottom and sell the top. Okay, it doesn't work that way. I don't know. You need to, if you're thinking that way, you need to fucking wake the fuck up. Snap out of it. All right. This market is extremely difficult, and even the most veteran of technical analysts in this space get thrown off. I don't care who you follow in this space. I don't care what stock you put in certain technical analysts out there. Every analyst, every person who reads charts and gives their opinions has been wrong, and they've been thrown off course before, okay? They've been obviously highly successful if they're doing well for themselves, but they've also made mistakes because there's no certainty in what we're doing here. All we're doing is looking at patterns and price action and price indicators, and it's giving us probabilistic views of what is to come moving forward. And I don't know where I was going with that. Sometimes, guys, I go on these tangents and I just start talking. I'm having a conversation by myself. There's nobody else here. So, I mean, come on. All right. I know what I was going to say. Yeah, so a lot of people get very arrogant, and I think it's more just hubris and not understanding how difficult this market is. And they have a view, and they think buying and selling, tops, all that stuff is so much easier. Is easy, but it's not. There's so much that happens. I brought this point up a few times. We spent all this time consolidating in here. People were losing their shit. I remember this. This was between March and October. It was about the same time that we're consolidating right now. This is March until we're in August. So, again, this market just has a way of weeding you out. I've been here long enough, guys. You've got to remain patient. You have to remain level-headed. You have to fight those emotions, and you have to stick to your intellect. If you've done your homework, if you educate yourself, if you're a nerd like me, and you've spent so much time analyzing charts, and you feel confident regarding some sort of hypothesis or assertion or whatever, well, unless the facts change in the chart, that's what you go with. You're going to get these short blibs and bleeps of volatility. That's the shit that happens in the market. Yes, breaking 100. Remember, I think there's a probability we don't even get above 100. But my primary view is we will break $100,000, and it sure as shit will be fun. What else we got here? What do I have on the list, guys? What do I have on the list to talk about? Do I want to do this? Nah. I kind of already talked about this with seasonal patterns. We talked about cyclical timing of the year, presidential elections, looking at 20 and 16, comparing 30. I mean, we can quickly do this. I mean, we basically just looked at it with these seasonality patterns. The other thing you could do, let's take a look at it real quick together. So I think I have a 3-month chart up here. If a girl tells you that she wants your butt, is that a compliment? Because, I sometimes have had women come up to me at the gym and say really odd things to me, like, oh, I wish I had your legs, or I wish I had your butt. And, like, why as a woman would you want man legs or a man butt? I mean, it's a compliment, but at the same time, I'm like, I don't know that I'd walk up to a woman and be like, man, I'd really want your back. Like, does anything seem weird about that? I don't know why I just thought of that. Random thought this morning, something that happened to me, and I just thought it was very strange. Anyway, so this is on 6 months. So what we're going to do really quickly, and this hits on my earlier comments on seasonality. These presidential elections, which, by the way, I would encourage everyone to study liquidity cycles. It's very interesting. Presidential election cycle, 4-year cycle, the Bitcoin 4-year halving cycle, and the liquidity business cycle, which is roughly, almost 4 years to 4 years, basically 4 years. They're all in lockstep with one another. Very, 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 very interesting. Nothing in life is coincidental. But regardless, if we study, probably shouldn't have done a 3-month, huh? Oh. This would probably be easier if I did a month. If we go back to 2016 and we ask the question, what did the third quarter of 2016 look like? Well, it would have been, would have been July, August, and September. So it would have been this price action right here. Let me zoom in there. So this is the third quarter in 2016. Now, it doesn't look like a high degree of volatility, but you can see in real time it was a high degree of volatility. We were all the way up here at $700, and we went all the way down to $450. Okay? So a high degree of volatility. You can see this third quarter really didn't do much. Then we get into the fourth quarter of 2016. Now remember, I'm comparing this again because this sort of cyclically lines up with liquidity business cycle, as well as, technically the halving cycle, as well as presidential elections. Okay, they all sort of line up. Now, if we look at the fourth quarter, you can see we opened down here and went up here, right? So, very, very, very bullish. Okay. Okay. So you can see we opened around 600 and closed up here towards 1,000. Now, if we go 4 years later, what sort of dynamic do we see in 2020? Do we see something similar or different? Well, let's look at the third quarter. This would be the third quarter of 2020. That would be, well, let me get the fourth quarter since the, oh no, wait. Okay, well. Here's the third quarter, and you can see we didn't really do much. We opened at 9,300, and we closed at 10,700. So just sort of a lackluster 3 months. But look at the fourth quarter. The fourth quarter is illustrated from going from 10,700 all the way up to 30,000, 31,000. Okay. So again, another explosive fourth quarter. If we go to 2024, look at this volatility that's coming in. So you can see right here, look at that. And I'm sure September will be whatever it is. But you can see the volatility coming in here. So what I would expect, maybe I'll save this chart, we'll come back to it. I would expect, September to be somewhere in this range, leveled out, hopefully a moderate amount higher than we are today. And then what I would anticipate is some sort of a green box, here. Let's go under 100 to start here. We're not hitting 100 right away. So I'll, right around there. It's close enough to 92. Yeah, so that's what I would expect. And again, this is just cyclically kind of lining up with what we've experienced in the past. So, maybe something closer to down there. September closes at around 65, 68. So, yes. So I don't see anything, again, there isn't anything as much as, I had posted out. I wasn't happy with this 2-week close. All right. If you follow me on X or Twitter, you saw that I was kind of making a joke about Bitcoin pooping the bed, but ultimately it doesn't change anything. High time frame just kind of puts into our mind that we could see some sort of chipping and chopping these next 4-6 weeks. Again, I honestly, my honest assessment of the market going into September and in the month of September, it's not going to be very exciting. What we do have to do is not lose interest in the charts, though. We do have to ask ourselves the question, in generalities, are we doing this? This is what we want to see. It doesn't matter if this takes us all the way up to October, as I suspect it will, and then we start to fire off. As long as we build, let's stay in the game. We got to stay in the game. We have to pay attention to the charts. And as long as we continue building these sorts of higher highs and higher lows, we're good to go, guys. So that's what I would pay attention to. I think that's it. I think that covers everything that I wanted to cover. Today's society sickens me. I feel you, James. I hate to be negative, but there's so much going on in the world. We're not going to get in that, but so much. There's so much disingenuous nature staring everyone in the face, and for some reason people accept it, or they acknowledge it and believe it, which is even scarier. I'm not the world's most intelligent person, but there are some things where it's just so obvious that no one likes my butt. I can't relate. Oh, Juan, there's somebody out there. Don't you have a girl in your life? I'm sure she likes your butt. Oh, guys, real quick, Ricky. Yeah, I had shared with you guys. So, change, Ricky. Change is good. We can't keep... was I going to have the Holy Crypto Trinity up for the next 5 years? But no, it's not up. Caspa, the Crypto Trilemma Hero. That's the new design that I had worked up and turned into some canvas art. So that is the new piece of artwork in the office. I hope you guys appreciate that. There will be some updated Caspa videos coming at some point when I make the time for it on the weekends. All right, guys, I think that's going to do it. This has been a pretty long live stream. Thank you so much for tuning in. I will be back here tomorrow. I promise you that, as well as Thursday. So until next time, everybody, let's all spread awareness and let's carry the education forward. Take care.